Hey everybody, thanks for tuning back into Crypto Mainly. Wow, it's been a while. Sorry guys, we've been trading our asses off in the trading group, so a lot of time been spent focusing on charts and things and making some money whilst Bitcoin has been pumping. But apologies, not been putting out the videos for you. So, but thank you for tuning in, guys. I do appreciate it. Let me just talk to you about a couple of things that just happened. If we go over to OpenSea to my account there, you can still purchase the NFT which entitles you to 6 months free access. So this one here, the VIP, that one entitles you to 6 months free access to the VIP channel. This one here is actually a monthly one. So, and the reason I've created that is some people have asked, they prefer to pay by card. So you can go to OpenSea, you can purchase a 1 month NFT. And as you can see, it's about $120 at the moment. But you can purchase the NFT that way if you'd rather pay by card. So just an additional feature there. Or alternatively, you can pay just directly by crypto. So I think the best thing to do, guys, if you're interested, come along to the our free Telegram group. So the link is in the description below. Come and join the free Telegram group. There's lots of information and content there. You can approach me directly there and DM me and things. And I look forward to seeing you in there. If we just look over at Twitter, have a look at my my Twitter page. You can see just to give you an idea, this is why the videos haven't been going out. If we have a quick scroll down, just so look quite a lot that I put out today, but actually over the last few days, as you can see, 61% gains on Anchor in less than 24 hours, 75% gains in Bitcoin on TRB. Anchor, 61% gains, 76% gains on TRB. So you've got SKL. I mean, it just goes on and on. If you just scroll down, the more you scroll down, you can see the charts with the win word on them, and you can see that we've been having a good time of it recently. So despite us being in a bear market, if you join the group, we are still making money, and you can see from the Twitter feeds there that we're doing quite well. So, and more importantly, as we enjoy the group, everything's it's very friendly. There's a nice bunch of intelligent people in there. There's no bots, scammers, and all that crap that you get in some Telegram groups. That gets eliminated very quickly. I've got very low tolerance of that type of thing. We want to produce a nice, friendly community where everybody joins in, helps each other. Shares their own content and information and things, and it's just becoming a really nice place to be. So hopefully we'll see you in there, guys. And let's jump straight into the content now. So Bitcoin over the last couple of days, it has been, very choppy. In fact, we were watching this. If I just highlight this a little bit more for you, we were watching this rising channel for a while there. And as you can see, it was breaking up and breaking back down and breaking up, breaking back down. Now in hindsight, if we actually grey that out a little bit, you can see actually it's more relevant that the upper part of the channel is actually there. This faded blue dotted line is actually the let's have a look. Go back in time, you'll see it's actually the faded blue line there. So from the first 65,000 peak to the midsummer peak here in sort of September actually 2021. So just under a year ago in actual fact. So that faded dotted line might come into play here, and that's the reason why it's still on there. But as you can see, it was around this area here, it was kind of flirting with that, and it wasn't. I mean, it's fairly significant. And it may play a role, but I've just left that on there for reference. So just in case you're wondering what that faded blue dotted line is there, I mean, obviously, clearly there's a CME gap above us that everybody's talking about, and there are a couple of sort of measured moves from where we are, which suggest that that's where we'll end up. So, for example, if we look at this formation here, we've got a classic breakout, and obviously what we're looking for in actual fact is a breakout and then a retest, and then the measured move then is the base up here to the top, which is this purple line here, which takes us back up to the top of the CME gap. So that red price there, 28,740, is going to be one to watch when we get there, guys, because that's the top of the CME gap. And I suspect that we get quite a strong rejection from there. once we get there. So 28,740 is that red dotted line there. The lower part of the CME gap range is at 27,365, and I wouldn't be surprised to see us do something like this where we break out, we come up to the bottom part of the CME gap, and then we do some some bouncing around for a while before we actually go close the CME gap, and then get the a stronger rejection from that CME level. Just historically, guys, if we look back through, you can see that actually, over the sort of September corrections that you usually get from Bitcoin, they're usually around about the 28% mark, roughly speaking. So if you take 28% from the top, that will take us back down to the 20,000 mark. So to the lower part of this range again here. So we've got, obviously, you're going to have an order block here. So I mean, once if we do get down this far again, we're going to be retesting that 20,000 again in September. Then there's every chance that that might break, and we might find ourselves going lower. I think that the a couple of things. So for example, if we look at the from a daily, I mean, if we took, for example, the measured move, if we do break down from this channel, if we take the measured move from a breakdown point, that takes us back down to the sort of 16,500 mark. But I suspect if we get down there, then we'll likely see somewhere between 14 and 15,000 would be the area that I would expect us to come back down to once we've cleared this CME gap. I think we might we might come back down as far as that. So just looking at the this is a daily chart that we've been following for a long time on both of my videos and in my Telegram group, obviously. And you can see we've been watching the 55. The red line there is the 55 EMA. We've been sort of bouncing around, flirting with it, which was a little bit concerning. The lead into the CPI data on that particular day, there we got a red, very strong bearish engulfing candle, which was very quickly negated the following day. So that did sort of, we were wondering whether it was time to exit there. And in actual fact, in my trading group, we actually exited before the actual the dip down. So we exited our alt positions up here in this range here. We exited the alt positions, and then the prices came back down, and then obviously on the bounce we re-entered, which was actually, let me just get this right for you. No, sorry. So looking at this, actually, the 10th of August. So this is where the where we got the CPI sort of pump on the 10th. So we exited our alt positions actually up here at this high, and then we re-entered on the way back up, basically. So we entered back into the alts somewhere in this region here. So we exited here, and then we re-entered. So we exited on the basis of the fact that the that this bearish engulfing candle was looking like that it actually broken a key support. So we've been watching this, which is obviously a parabolic curve in the group, and the bearish candle did actually look like it was breaking there. But we, as I say, very quickly, once the CPI data came out, we sort of we broke back into the range, and now we're continuing higher. So that's a good sign. So yeah, I mean, so the long and short of it is, if it's not only about trading in the group, it's also about protecting your capital. We did come out at the right time. We came back in. We protected ourselves at the right time, and we came back in at lower levels, and that's as important as getting the trades correctly in the first place, as I'm sure you know. So do think about coming and joining us, guys. We're not only trading in the right direction, we're actually protecting ourselves when things are going in the wrong direction. Okay, so this was the parabolic curve that we've been watching for a while. The purple dotted line is the parabolic curve, which you can see is still valid and current. The blue dotted line was more from the lows of this range here, so you can see that actually if we take out the purple dotted line there, you can see very clearly that actually the supports of those candle bodies, you can see that we did break below it, and that's the point where we started to get a little bit concerned, and we started to react to that. But as I say, we reacted in the opposite direction once things turned around again, back in the upward direction. So very nicely traded there. this is something I just put up earlier today. This is the 2-day time frame Bitcoin, and as you can see, just it's interesting to see. You see, I've highlighted the vertical dotted lines there, and it's basically to show each point where on the ADX at the bottom, you've got the green, the green line crosses over, back above the red line. So at each point where the green's crossed back across up above the red, I've just put these vertical dotted lines in there. And as you can see, you can see the direction and what happens shortly afterwards. So from each point, you can see exactly. This one was a little bit short-lived because obviously we know what happened there. That was March 2020. Even so, the next cross produced some more upside, followed by another cross. Obviously we've got a bit of a correction, a bit of a corrective move in the middle there, but you can see we've got a nice. This is on a log scale, guys, so this doesn't look, doesn't look as impressive as it actually is. But you can see at each point, you get the idea that at each point that you get the ADX cross on the 2-day time frame specifically. It's a very clear indication that we're going to get some upside. I mean, even on this downtrend here, you can see that we got an ADX cross here, although it doesn't look particularly fantastic there, that's actually somewhere in the region of, from memory, I think it was about a 30% move. So yeah, in the vicinity of a 25 to 30% move. Okay, which, I mean, this is on a downtrend as well, bear in mind. So we've got an ADX cross on a downtrend, and we are still in a downtrend officially. But having said that, you can see that the ADX has just crossed now. So even on like the smaller, if you look at some of these other measures, they're actually, they're actually a lot bigger, even in the lead up to the sort of the COVID crash there. If we measure, that was a 52% move there. So it doesn't look particularly big on. I think that's the trouble with log scale when you're looking at a log scale. That was a huge move, 55% move there. So each of these moves have been significant basically, and even this smaller one here at 25-30%. I mean, if we add, from where we are exactly now, the ADX cross has just happened. If we add 30% or 25, let's be conservative, 25%, takes us back up to around about the 30,000 mark, which is interesting. We've got a CME gap above us at about 29,000. So that would be interesting to see. I wouldn't be surprised if we do overshoot the CME before we get the rejection, but I think that the rejection is going to happen somewhere in this vicinity. So whether we reach the 30,000 or not remains to be seen. I think if it wasn't for the CME gap being there and for all the eyes being in this area, then we would actually reach this level here before we had run into any problems. But the CME gap is going to be what causes the rejection. So we would be ending up 31,800. In fact, I'd actually say that we're probably more likely to go for the range high, the wick high actually. So that's 32,400. So if it wasn't for the CME gap, I think that's where we'd end up, 32,400. But I think that people will be watching this and expecting us to get that far. But the CME gap, once that gap's filled, you'll get a strong rejection. It happens every time. So we'll likely come up to the underside and we'll bounce along the underside before we break through. It's actually clearer to see. Clearer to see on here. So if we do get the breakout here, I think we'll get this type of action here before we then come up, fill the CME gap, maybe spike a little bit above it, and then we'll get that stronger rejection into September. First week in September, guys, just keep your eyes peeled. I'm going to be exiting the positions towards the end of this month into the first few days of September, but I won't be hanging. It doesn't matter how bullish the market looks, I won't be holding on to my positions into September. If you look back through history, Bitcoin averages between 25 and 30% corrections throughout September. Each year. If that happens again, doesn't matter about the merge, doesn't matter about the merge is another thing actually. Once the merge actually happens on the 15th 16th and then they get the airdrop afterwards, there will be a big sell-off. I'm not going to 20% 30%, but I don't think that that's going to be like the end of the cycle or the end of the the Ethereum positive price action. That is just going to be just the normal September thing, and then obviously once that's settled down, things start to bottom again, and then things will take off. And obviously once the merge has happened, then it's acting like the equivalent of a triple halvening. So it becomes deflationary, cost prices become lower, it becomes more scalable, and all those nice things that we're all looking forward to. So in terms of like for the next 18 year to 18 months, after that, that cooling off. So we're going to get lows in September, but after that, the next sort of 12-18 months will be really nice, I think. And obviously that will then take us up to sort of May 2024. And we all know that the Bitcoin halvening is happening in May 2024, and after the halvening, price goes ballistic as well. So I think it's a nice things to look forward to going into the future. But I just like you all to be prepared for the fact that September, in my opinion, will absolutely be catastrophic. And and obviously a lot depends on traditional markets, guys. And I just want to talk about traditional markets quickly because I was expecting something along, you know, if you've been following me for a while, if we just scroll out for a moment, whilst we were down in this area, I was expecting us to fill this CME gap and then roll over and come back down to get some kind of ABC and then get a lower move back, sort of, towards the end, sort of, well, the early part of 2023. You've got the US elections in November as well, so you would expect the prices to be coming down in, towards that midterm election. If you look back through history, that's traditionally what happens. So, I mean, these are, you can see here that I was pointing out to the group that we were creating lower highs here. You've got a weekly wick range and a weekly candle body high. Are these two dotted lines here, and you can see we've clearly broken above there, which is absolutely great. I've drawn a trend line across the lower part here as well, and you can see that should have been resistance, and we've broken through that as well. So the SPX is performing really strongly at the moment. The only thing that concerns me, I mean, we've broken weekly ranges, which is significant, but I do wonder if we're going to reject from this trend line here, whether we're going to reject and come back down to the lows. I still think that we're going to end up down at the 3,500 level for the SPX. I mean, if we do break up, if this is now I've put these two blue lines on there, these two blue lines, you can see that it's actually a descending broadening wedge, which is a bullish pattern. But that's not to say that that we don't come back down and then we come back up and we break out of the bullish pattern and we continue off, and it's something as crazy like that. But so don't be fooled when you see. I've seen people already talking about this being a bullish structure. Well, it is a bullish structure, but are we going to break out here? I think actually not. I think we're actually probably going to reject down. Prices are going to start to come back down. The CPI data for next month, the CPI data for this month was skewed heavily with the fact that the the energy commodity prices, things, oil, gasoline, things like that had come down huge amounts, which really had a big effect on the actual CPI data. And I think next month that's not going to happen. I think that you can see already with natural gas and oil and things, the prices are creeping back up again, and there's not going to be that that heavily weighted sort of corrective sort of downward pressure in the CPI data next month. So I think that September, the CPI data is going to come out. It's going to be pretty horrible. And also that's going to lead us into September, which is traditionally a bad month. And then obviously we're then going to be October, November, and into sort of midterm election territory and things. And as I say, if you look back through history, that is traditionally a bad time leading into the election for traditional stock market. As you can see on the S&P, incidentally as well, although we've crossed the weekly range highs here, if we notice at the top here, there's if we put it onto a weekly scale, you can see it even on a weekly scale. We had the highs here, we broke the highs here, we've got highs here, we've broken the highs here. There's not very much difference between what's happened here. We've broken weekly ranges here, not only this weekly range but also this weekly range here. We broke that, but as you can see, things rolled over quite quickly off the top of this resistance line, and we're fast approaching that same resistance line. So I mean, I don't want to be all doom and gloom, guys. Things are really quite exciting at the moment, and things are looking really nice. We've got the merge to look forward to and everything else. But I just want you to be prepared for September, and once September's out of the way, then we can really start to have some good times. I think that going into the back end of this year, sort of certainly from the early part of next year, things are going to really start to take off, and we're going to have some really nice times ahead of us. So, and I'm really looking forward to that. So just to give you, on ending on a positive note, just want to look at Ethereum. I've been asked a couple of questions by some of the people in the group, and one person in particular I've known for a long time, we always have a really nice, intelligent conversation, and he always throws sort of spanners in the works for my ideas and things like that. And he's a great guy. He's called Sean, and he's in the Telegram group. But we were talking the other day about the EIP 1559, which is obviously when that happened. So if we look, that was actually on the 5th and 6th of August, so it was here, okay, on the chart. And as you can see, I mean, the move from the lows to the high, so sort of like, the beginning of the hype, shall we say, for EIP 1559, actually led to about 180, 186%, I think it was. Let me just get it on the right place for you. 180, nearly 186% move from low to high. This is all obviously based on EIPP 1559. But as you can see, even in the strength of that move, this corrective move here, you can see in the center there, it was considerable. If we go back to the week low there, that was a 35% correction there, and look where it was. 3rd of September was when the corrective move started. So first week in September, hence the reason I'm mentioning exiting the positions towards the end of this month. And a 35% move in the middle of such a strong amount of hype and market sentiment and all those positive factors that have been driving this price. Even then, the Bitcoin corrective move brought down the price of Ethereum, even in amongst that the hype of all the EIP 1559. So I mean, what I did is I just did a bars pattern from the low to the high here, and just moved it across just for interest's sake, really. And this would suggest that possibly, we end up into, the $2,500 territory, maybe before we then come back down, and then maybe even end up, somewhere in the sort of $4,000 territory, which I mean, it's possible. Anything's possible, but I think, my point is just to be prepared for this September, because you can see, even just moving the bars pattern across, you can see from the low to the high there. Look where look where that is. The high comes in at even just on a bars pattern, just roughly, copied and moved across. You can see towards the end of this month is when you would expect that correction going into the first couple of weeks of September, and then obviously then get continuation afterwards. So there's some nice things ahead, guys. I really do think that. But just be prepared, guys. Just protect yourselves. If you see the market starting to turn around, and you're not in my group, then keep a really close eye on it. If you are in the group, guys, I will keep you very well informed on what I see, and my eyes are going to be peeled. So please do consider coming along, joining the public Telegram group, seeing what it's all about, and then obviously you can consider coming into the VIP group from there. Hopefully. Okay, guys. Thanks ever so much for listening. I'm sorry I haven't been around for it's nearly 2 weeks now, I think. But apologies for that, guys. I've been very busy keeping the members of the group happy. So do come along and join in with the fun. Okay, thanks ever so much, guys. And always remember, take profits, buy something real. And I look forward to speaking to you again soon. All the best.